past 2 decades, we had experience of raising municipal bonds, and most of them in the recent past through pooled municipal bonds. And our experience is that we raise a 10-year bond and try to build a 25-year asset. And which means that the repayment period is short, and which also means that you'll have to raise more money to repay the debt, which also, which in turn means that that would demand imposing higher user charges or a dip into your general funds. Yes, when you have a system where the municipalities and corporations are allowed to periodically revise their taxes, it would form a good base for them to approach the market either on their own steam or through a pooled municipal bond instrument, the market, and able to raise funds better, leverage funds better. But that's not the case now. As you go down from the Government of India down to the municipality and the village panchayat, the level of populism goes up. And maybe because I think they are in closer contact with the public, and they feel that compulsion to respond immediately to a perceived public need, which even if it means that I need 100% service, but I will be able to pay you only this much. It's not, most often it's not the public who are saying that I'll pay you less, but I think it's basically the competitive populism that is saying this. That's what we see. Now, having said that, now yes, we had 20 years of experience in raising bonds. With all our track record of not failing a single installment of the debt repayment, when we have the latest in a tranche, when we approached the market, we've got 10.5% interest rate. Now, that's a bit perplexing, and at the same time, we have instances of the Indian bank going after Madurai Corporation and then offering loan at 9.5%. Indian bank going to Coimbatore Corporation and then saying, I'll offer you 9.5%. No questions asked. No questions asked. At the state level, we do a financial appraisal of the projects, whether how much debt you can take, how much grant you need. We do all that. We do a financial operating plan, and then we say you can't take more than this much of debt. And but then you have a bank crawling before a municipal corporation to lend. And when I go with a structured instrument to the market, I get 10.5%. I think it's maybe because I think the capital markets are not aware of the municipal bonds enough, or they don't impose confidence enough in the municipal markets, bond markets. Given this scenario, I think it will be useful instead of looking at more stringent regulations for this market. I mean, to cap it all, now you have SEBI coming and asking you to have only a company do this bond markets. Only corporate municipal entity can hit a bond market, and it can trade on the stock exchanges. And many regulations, many requirements. Life was simpler as a trust. We never failed as a trust. We have raised almost like 20% or 25% of all the money that has been raised in the bond market. Now you have this requirement, you have more stringent requirements. There are two things that are trying to be married. One is capacity building in the municipalities, financial capacity building in the municipalities, at the same time deepening of the bond markets. I think we should look at both of them separately. Let us first of all look at strengthening or deepening the bond market. Once you can parallelly attempt this also, but don't tie them. If you don't tie them, I think we can sail and achieve some progress.